Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Monday, March 9th, and my name is Raleigh White, and I'm coming to you live from a cloudy, overcast day here in Austin, Texas. And bring the rain, please. It's been a very dry winter here, and we'll never argue with rain in Central Texas. Anyway, I'm going to be your moderator today, and in today's session, Roger's going to be covering a range of important topics, including he'll start off with the midday market analysis and an update on which major stocks are on his watch list. And then we're going to pivot. He's going to talk about why the VWAP is the #1 indicator that institutional traders use. He's going to share how the VWAP is similar to the volume profile, but different in a couple of key ways. He's also going to talk about what the anchored VWAP is and how to use it, which levels should be used to set your anchored VWAP, and how to confirm price action off the anchored VWAP. So a ton of discussion on one of Roger's favorite indicators today, the VWAP. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that I've opened the chat room to everyone. And remember that we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. And keep your side conversations between one or two of you to a minimum, because this is not a chat room, okay? This is an area where we've come to listen and learn from the education that Roger's going to be sharing, because after all, he's here to give us an edge and to help us become a lot more consistent and confident in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern Time for Roger's pre-market must-watch show, you'll note that there were several key catalysts that we needed to be aware of. From the Magnificent Seven, we noted that Google, Amazon, and Meta were all down 1% coming into the open. On the chip sector, we noted that Marvell was down 3% and Lam was down 1%. In the airline industry, we noted that United Airlines and American Airlines were both down 3%. And in energy, crude up 13% in overnight trading. And as a result, we saw many energy stocks, including APA and FANG, up 2% coming into the open. On the international front, we noted that the Euro stocks was down almost 2% and the Nikkei was down 5%. With regard to the Fed, really nothing of importance today. It's rare that I see a clean slate, but there's just really nothing on tap today that is scheduled. So for those of you that are wondering, why do we look at catalysts? Well, from Roger's perspective, if there's information that's either known or will become known during today's trading session, but is not yet priced into the market, that represents a volatility flashpoint. And from that standpoint, we need to be aware of these catalysts, because it certainly could have an impact on our decision as to whether or not we might want to take a trade that could be impacted by these catalysts. Now, as far as Roger's pre-market stock watch list is concerned, you'll note that there are 18 tickers that he provided with us today, 11 shorts and 7 longs. Now, on the long front, you'll note that XOM, which is ExxonMobil, and CVX, okay, are both underlined. And the reason I've done that is Roger doesn't really like to go ahead and trade stocks that are so highly correlated. But in this particular case, both ExxonMobil and Chevron Texaco were looking excellent to him. His advice was, he calls it one per customer, that if you're basically going to be looking at trading both of these ticker symbols, take your share, cut it in half, and put 50% on ExxonMobil and 50% on Chevron Texaco, because you do not ever want to be overexposed or over leveraged in one correlating area in the event that things go against you. So once again, 18 tickers. And folks, let's be clear about what these watch lists are. These are large cap stocks that Rogers identified in the pre-market have the potential to be tickers that he might want to trade during the day. This is not a guarantee that these are stock entries that he's going to make. But should either any of these tickers meet his criteria, more than likely he'll take that trade and he'll place that trade in the trading pit or in a number of his other premium alert services. As far as Roger's pre-open thoughts were concerned, we did noted that the indexes were all significantly lower coming into the open. So over the weekend and in today's open, the futures markets were down in a big way in overnight trading. We noted that the put to call ratio was a bit unbalanced, favoring the puts. So the put to call ratio was starting to move up high in its range. And typically, when it does that, it's kind of a signal that we could see a reversal, but the puts are a little bit ahead of themselves at this point. The big thing that we noted was that the VIX was up sharply above 29. From Roger's perspective, anything over 20 tells us that, that the fear index is getting to the point where it's interfering with the ability of the market to move higher. And in overnight activity, it was up over 29, almost near 30. So that's a key area to watch. As far as the sectors are concerned, the sectors remain mixed, pretty evenly between defensive and speculative stocks at the top of the list. So no clear-cut winner at that point in time between defensive and speculative stocks. As far as the SPY, the QQQ, and the Dow were concerned, these major indexes were down and all sitting right about at their 200-day moving average. That's where they were sitting. And as far as momentum was concerned, Roger noted that there were 588 companies coming into the open that were making 1 month lows. And from his perspective, anytime this number gets above 500, it means that this is an overextension, and we can, we can expect to see a correction of some time. With 588 coming into the open, Roger wouldn't be a bit surprised to see this number into the 600 or 700s today, given this momentum. So once again, momentum is down in the markets. Ultimately, from his perspective, he says, folks, we have to exercise caution. First of all, it is a Monday, and especially Monday in the mornings. This is typically when stocks tend to liquidate themselves. Now, we don't have any news this Monday morning, but Roger's recommendation would be just let Monday morning sort itself out and look for opportunities in the afternoon. He also feels that we should keep a sharp eye on the VIX and the crude because it's basically the best indicator that you can see in real time as to how the war is impacting the market. So keep an eye on the VIX and on crude oil prices. He also wondered this. Will the 200-day moving average hold on the major indexes? And will the VIX retrace back into the range it established on Friday? These are things that Roger wants to see. He couldn't predict them, but he said, hey, if these things will hold at this point in time, we might see some recovery in the market today. But to suffice it to say, choppy markets, a heck of a lot of volatility in the markets at this point in time. We need to exercise caution. And if you're going to be placing trades, just make sure you know absolutely what you're doing. So for today's agenda, folks, Roger's put together, I think, an excellent session. He's going to begin by giving us a midday market analysis and an updated watch list, okay? And then he's going to talk about the VWAP, okay? And why it's the #1 indicator that institutional traders like to use. He's going to talk about how the VWAP is similar to the volume profile and what the differences are. He's going to talk about what the anchored VWAP is and how you use it. He's going to share the key levels that you need to be aware of and use to set your anchored VWAP, and then how to confirm price action off the anchored VWAP. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, remember, folks, I've opened the chat room to everyone, but we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever, and keep chit chat between 1 or 2 members to a minimum because this is not a chat room, okay? This is a place where we've come to listen and learn from the information that Roger's going to be sharing with us, because after all, he's here to give us an edge in the markets and to help us become much more confident and consistent in our trading activities. And with that, folks, let's say hi to the team. Good morning, Matt. I hope that you had a wonderful weekend. Roger, great to see you as always. Hope you had a nice weekend. Matt, I know you've been a little busy. You got your eyes on the SPY, as it were. Nice trade this morning. Way to
Thank
get
you.
about 4.5 points, if I'm not mistaken.
Yep.
Man, So once again, I just use this as the backdrop of everything that's going on in the markets. If you know what you're doing, if you have a plan, you got a strategy, and if you got Matt on your side, you're probably going to do okay. And then again, there's the man of the hour, Roger. Buddy, it's good to see you.
You too.
Interesting weekend. Just watching news over the weekend, I couldn't help it. And we don't get an indication on what news is going to do to the markets until Sunday afternoon when the futures markets start to wake up. So, man, I was up early this morning. I don't know. I had a lot on my mind and I was watching what was going on. And I'm wondering if you're a bit surprised by what you see, because I certainly am, because there's been a bounce back, there's been a recovery. It looks like that 200-day moving average is holding for you in the indexes, and bonds have responded nicely as well.
So far, so good. And by the way, once again, while the market was down, we took a very nice gain on a small cap stock a
Uh,
few minutes
uh,
ago. We had another winner chicken dinner there as well. So we've been doing pretty good. We've been doing pretty good. The only thing I'm concerned about is we have a couple of swing positions on, and we have to make sure that does well. But we're not. We have specific levels, and if they don't hold, then we're gonna cut cut the position. But so far, we're doing really well. Thank you, Eagle Beagle. I appreciate those nice words. So let me go ahead and share my screen. Let me go ahead and do that right now.
Absolutely.
Um, but yes, I'm not really. I wasn't really that surprised based on what I'm seeing in the market at all, quite honestly, because what this market needs to do is it needs to completely assimilate the worst case scenario of this
Mm,
war.
hmm
It took a little while with Ukraine and Russia, but that's not our war. This is our war. The market has to assimilate the worst case scenario. As soon as the market assimilates, and it might have done that already, then the price will not be going down anymore based on the war. It may be going down based on something else. But a few very interesting things that we noticed today. Okay, first, you should be able to see my screen, right?
Yeah. See, yeah, it looks great.
There's a couple of things that are developing right now under the hood. So first things first, semiconductors. Remember, semiconductors and mags started this descent ahead of everything else. And look at how strong chip stocks are most of the day today. They're really strong. And again, Marvell came out with earnings last week and they were fantastic. Or yeah, it was last week. And they were fantastic. Every chip company's coming out with great numbers. Chip stocks, semiconductors are holding on. I mean, QQQ, the broad technology sector is holding on really well. And mags are starting to come back up.
Hmm
So that's one thing that looks very positive. The second thing that looks very positive is right here. The market came down to overextended territory right here. This is overextended. This is overextended to the upside. This is overextended to the downside before hitting the 200. And now we're coming above that level pretty aggressively.
Yeah.
Once we once we get into 671, we're going to be at yesterday's level, okay? So that's one thing that's coming out. That's not one. That's so we got technologies coming back. We've got the SPY trading above overextended areas. This would be your profit target if you were shorting. I'm not suggesting you should be, but I'm saying for shorts, this would be your profit target right here, below this area. That would be your see, every time it comes here, it comes back up, it bounces,
Yep.
it bounces. So I'm looking for a nice bounce, which we're seeing. That's a nice V recovery right now, which we are seeing. So I like what I'm seeing there. Now, another thing, and this is really important. Unfortunately, Kramer's not going to talk to you about this. So we now have 585 stocks breaking down, okay, making a 20-day, 1 month low. But if you look, see, this is the benefit of having screenshots and showing you guys everything in real time.
Yeah.
Earlier today, again, we get a lot of testimonials. Okay. At 10:57, see crude oil, see this pattern?
Yep.
It's a reversal pattern. Remember what I told you this morning? I said what I want to see at the end of the day is I want to see crude oil finish just like this. And what I would really like to see is crude oil come into this range.
hmm
Okay. I've said it more than once. The other and here's volatility. Here looks at volatility, and I said this in yesterday's range right here. So just to remind you, in case you're thinking that I'm pulling the old Monday back quarterback on you, a few things. This is me telling you this at 8:39 in the morning. See?
Yep.
Volatility, arrow down, inside range. Okay. You see crude oil, high volume candle. I said if this becomes a high volume candle, and if price stays like this, that's a reversal. Might as well here. Where did I say it? Right here. If, and it's a big if, we continue holding this pattern today and volume is extra high, that's a capitulation on energies if this pattern holds into the close. Big if. I said that twice. But this is 8:21 in the morning. This isn't noon. This is 8:39 in the morning.
Hmm.
Everything I told you about is right here. So now, oh, and I forgot the most important thing. And there was one more thing I mentioned to you. See 588?
Yep.
The number of stocks breaking 1 month low on Friday is close to 600. This is a very strong number and a number that reverts most of the time. This is telling us we need to bounce. We need a bounce soon. Keep an eye on this number today, along with energies and volatility. Hey, energies and volatilities. Didn't we just talk about that?
Yes.
So, and survey says, hold on, 727, 727 at 1036.
At 10:36. Yeah. You thought they were going to open much higher.
I did. Well, I said they're going to open up low. They're going to open up higher because we're lower than we were on Friday.
Yeah,
So
lower than we were on Friday.
yeah, we were at
Exactly. Yeah.
588 on Friday. So I said we're going to open lower, and I'm saying even 588 is a very low number. You could see the number right here: over 700 stocks making 1 month low. Too much, too much, too much. I might have even said something in the pit about it too. I'm not sure. Let's see. Yeah, right here. Almost 700 stocks breaking down on a monthly basis. That's really high. Usually we bottom out when momentum gets that weak. Let's see how things shake out today. That's at 10:10 in the morning. It's noon right now, right? Well, guess what? This number is now at 585, which is below where we came into the day at. Okay. So I think we're near the bottom, at least a swing bottom. Why do
Hmm.
I think that? For three reasons. Well, more than three, but three primary reasons. All of which I told you about 3.5 hours ago. Volatility is now in yesterday's range. And please don't say I didn't tell you because we have timestamps on two different channels and a recording from 8 o'clock. So there's plenty of evidence of it. And I'm not suggesting anybody saying anything. I'm just saying. So we went to a resistance level, which I drew for you about a month ago, right here. We are now inside this range. This is very good. This is
Hmm.
this is very positive. I would not be short here. I told Matt that that's the same thing. I wouldn't be short here. Are you still short?
Mm-hmm.
Be short here. And crude oil. Here, let's go to.
Yeah. The movement in crude. I mean, my gosh, there's been a $10 move. Yeah, we're
But
trading at 96 now, underneath 100. That's
what we need to see is we need to go down here
yeah, and it's
into the
heading that
range.
direction. Yep.
It is. It is. And this is the fat. As long as the meat. See how this is a huge. The whole bar is a tail, right? We call this a lizard. We call this we call this many things, but it's a, when you have a gap like this, it's a Gilligan's Island because you have a gap and this is an island on its own away from the mainland. You see that? See, this is the mainland and this is the island. Or you can call it a lizard. I usually call it a pin bar. Whether you call it a lizard, a pin bar, or a Gilligan's Island won't change what it is. It's an exhaustion pattern. It's telling us we got too overextended. And also remember, we had excuse me, we had a whole weekend stewing over this war. So there was a lot of pent up energy in the market, and most of it was to the negative side. So my point here is that This is very good as long as we stay here. Remember, we still have 4 hours, 3.5, 4 hours till the close. As long
Right.
as we stay here, we got to stay here. We got to stay here. I'd prefer to see what we're seeing on oil right now. I want to see something more similar. I mean, I want to see on here. I want to see this on oil right here.
Yeah,
See
what
how
the
we're
VIX is doing.
inside?
Yeah.
See how we're inside the range? I want to see that on oil. Even if we don't, I'll take what we're seeing now, but I'd like to see it on oil. As far as the overall market is concerned, we're doing a great job of defending this trend line. We're actually almost inside yesterday's range. And if we close in here, that's good enough for me. That's a really good sign. QQQ is not even down on the day, folks. QQQ is positive on the day. That's very, 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 very bullish. Hitting the 200-day, bouncing on the day, that's very, very, very bullish. What did I say to you this morning? Let's take a look. It's nice to have something to refer to, so you can't go playing the whole he didn't say that, you didn't say that. No, I didn't just say
We're
it. I
not worried
said it.
about that. Yeah.
I said it and posted it, but I want to show you guys. Look, QQQ's at the 200-day moving average. We need to hold the current level and bounce here. The next level is slightly below 200 at, not 603. It's at, below the 200-day line at 603. Yes, below the 200-day line. I typed this fast when I'm still live in the morning with you guys. Yeah, 200-day moving average, 200 at 603. Yeah, it's right. It's actually right here. The hell, what did I say? 603. No, it's at five. This is wrong. I'm just going to leave it alone, but this is wrong. It's at 578. I think I was talking about a different index. I don't know what I was doing, but it was in the morning. But you guys could hear it all. And chips, let's look at chips real quick. Chips are defending the 100. They're up on the day. And what was the other one? That's pretty much it. Those are the ones I wanted to look at.
Yeah, you were the major ones, the SPY, the QQQ, the Dow, we're all sitting there. And your question was, well, your hope was, this is where I love it, Roger. Your hope was you wanted those levels to hold. And you
Yes.
wanted to have the VIX come back into Friday's range, and you wanted to have crude oil also retrace. That was your hope.
And and
Not
and
your
and
prediction. You said
no,
if
no,
these
my
things
hope.
happen, it's good. Yeah.
Yeah,
And they're
and
happening. Yeah.
this thing to peak out and to start coming back down. And again, we're now below here 588. Now we're at 562. So we are coming off of this level. I'd love to see this close at like 400, 350. That would go a long ways to telling us we bottomed out today. Now, notice I'm not looking something very interesting I wanted to explain to you. If we were not in this war and if this was not going on, do you think I would be looking at crude oil as a barometer of whether this market has bottomed out?
No.
No.
No
Maybe
way.
volatility, I mean, yeah, but not crude oil, right? This is what I'm saying. You read books or you read people saying, look at Nvidia. When Nvidia bottoms out, it means, I mean, I've seen books written about this. I mean, I roll my eyes. I mean, it blows my mind away. uh, Make sure you look at Nvidia. When Nvidia bottoms out, it means you got a slew of S&P traders gauging what everything they're doing based on Nvidia. But if there's a war and crude oil is on fire, nobody cares about your Nvidia. Okay, so you got to look at this is why we do catalysts every morning. This is why we talk about what's going on in the news. If you don't know what's going on in the news, you're not going to have a really good idea of what's going on in the session. So at least the general barometer. So I think it's very, very important to be able to do that. I think
Yeah.
it's very, very important. And I think I think once you come here and you start seeing more of the bigger picture, you start and not seeing the market like this, you start really seeing it for what it is. But don't ever think one stock always moves the market, or that's just not how stocks move. That's not how markets move. Markets are a living being. it's like going to a doctor and the doctor saying, when your nail turns purple, that means you're dying. No, it just means your nail is turning purple. Maybe something's wrong with your finger, but you're not dying. You can't gauge everything based on one stock or anything like that. Market is dynamic, it changes. Today, crude oil may be the hot topic. Tomorrow, it may be Nvidia. But I'm just letting you know, folks, the market is a living being. And if you treat it like a binary object or binary numbers or like a computer, you're going to get out of it what you put into it. Okay.
Mhm.
So notice how many different things I'm looking at to give me a gauge. And most of these things are not even traditional. Like, who the hell would look at how many stocks are making a 1 month low intraday? Nobody does that. I mean, this is not an indicator. This is just something I've been looking at every single day for 20 years.
Mhm.
So, and I know that every time this comes down, and I showed you, we went through it like a few days ago. It hardly ever goes into the 500s. To go into 700s is extreme,
Right.
extreme.
And every
So
time it's done that, Roger, well, in most cases, it does tend to revert.
it
The other
does.
thing is this, Roger. You said how many people looked at this? I didn't until until you started telling me about it. Now
Yeah.
I look at it every day, and I like the fact that the 20-day you consider to be once again, that's not a trend, if you will.
No,
The trend you
no.
look for in the 90-day.
Right. Right. That's the beginning. 90 days is just the beginning of a trend.
Yeah.
I actually think 6 month and 1 year is even better, but 9 month is the beginning of a trend if we want to catch it early. But anyways, so several things. The fact that we are in oversold territory here, that's one. The fact that crude oil and the crude oil is reverting, the fact that volatility is reverting, and the fact that we are near key levels like the 200-day moving average, 100-day moving average on certain indexes, and the fact that we have less stocks bottoming out than we did this morning. That is significant to me. That is significant to me. Okay. And also technology starting to move higher. Remember, technology and bank stocks were in the toilet this
Hmm.
entire time. So we are starting to see something. Now, the negatives. What are the negatives? Internals are breaking down right now. Okay. Although remember, we have a pretty lopsided market right now. So I wouldn't focus on this as much. This is not an even market. There's a lot of concentration energy stocks and basic material stocks that's pushing us down. So we don't really have that much of a balance. This is coming up. It was down 2000, now it's down 1500, but we're still near the value area low, which I'm going to be talking about this today. Okay. All right.
Yeah, that's quite
So
a divergence there on the vol between the SPY
yeah,
and the volume.
it
Yeah.
is. It's very big. But again, we're not in a normal market environment. We're not in a traditional market environment. We're in a very lopsided market environment where you have a certain class of stocks, energy stocks and basic material stocks, just kind of doing their own thing. So you don't have a lot of evenness to this market. So I would put less weight in the vold when that happens
Mhm.
because we don't have a balanced market, and this whole thing is based on a balanced market.
Right.
So, um, but notice volatility. Volatility does not lie. If you want the most sensitive asset to the market, it's volatility. There's no because this measures the add the money premium on the S&P option. There's nothing more sensitive to volatility than that. Now, do we have any questions before we move on?
No, Roger, just a lot of wonderful comments, and the thing is this is that the briefing that you just gave us today is similar to yesterday, similar to last week, similar to
Yep.
last month, similar to last year. In other words, you have a very structured way that you like to go through looking at the markets because it tells you holistically from a big picture what the heck is going on, and that starts your drill down into those stocks that are currently on your watch list.
Yeah, exactly. That's exactly right. Exactly. I'm very methodical. It's like, if you take a guitar or if you take drums, there's only a certain amount of beats. There's only a certain amount of chords. There's only a certain amount of scales. And you can learn all of them, but you can apply them in a
Infinite
indefinite
number of ways. Yeah.
exact, and it's the same thing. It's exactly the same thing we're doing. We have a set of rules, but the market does its own thing. So it's not like, see, if we had a specific set of rules, and if the market always did the same thing, then I would be the most boring guy in the world because I would be saying the same thing and my analysis would be the same. But I'm just using the same barometer, but the market changes every day. So the market will always change, and we always gauge it with the same tools. You don't want to gauge the market with a different set of tools every time, because then you'll always be, you'll never have a baseline. This is all this is, like this 20-day breakdown. It's just a baseline. And this goes back to what Cyrus says. Cyrus, I don't know if you're here. I don't have the chat open, but
He
a
is.
lot of,
Yep.
okay, good morning, Cyrus. And again, Cyrus, I'm not picking on you in any shape, way, or form. But Cyrus oftentimes says, oh, this is a fake market. This is a fake market. And my response to that is, okay, fine. But you have a baseline. See, like this is my baseline. So whether it's fake or not, you still have some baseline to know whether that fake market is going up or down. You see what I mean? So just like this, I don't know if this is a real, I mean, this doesn't have, I've never read a book or anything about this. I've been just watching it forever because it's on my list every day. And I've had this is probably the first tool I've ever made here when I started using this over 20 years ago. And when you use something for 20 years, you start getting, you start remembering what you see every day. And I know that anytime this gets into the high 400s or high 500 or mid 500s, it got into 700. So again, Cyrus, you could still use fake, anything that's you consider fake, you could still use that number as a baseline. Okay. So just throwing it out there. All right. Throwing it out there. This market is filling in the gap. So right now, we are literally almost a tick or two away from being on Friday's level. Do you guys see this?
Mm-hmm.
And notice this V type of recovery. That's a this is one of the reasons why I told Matt I wouldn't be short here. This is a very nice recovery. This is a very, very nice recovery. It's continuously been going up. I mean, look, we've been above the VWAP ever since we got out of that morning digestion, which which Matt actually and me both picked really well right here. All right. All right. I'm just letting you know, I like what I'm seeing right now. This is positive. Just got to check one thing. I have one stock that's been giving me heartburn. I want to see if
No.
it's moving up. Yeah, it actually is moving up right now. Okay, cool. All right. Here, I'll show you guys what it is. This could potentially be our first loss in the pit. This is a stock called GE. I've been long this stock for about 3 days now. Since I'm not long since here. I'm long since here. Actually, right here. And I literally need 2.5 days for it to recover, but I need the stock to close above the 50-day moving average. And that's right here. I need the stock. You see where it is right now? I need it to close above this blue line for me to hold it. If it closes down here, I'm not going to want it. I want this to keep coming back up and ideally close above 320. That level is like 319, 320. That's ideally what I'm looking at for today. So far, it's looking good. Again, would be if I close this trade out, this will be our first loser in 5 months in the pit.
In the pit.
In the pit.
Hey, listen, a quick thing here, guys. We're
Yes.
starting to get folks, this is not a chat room, all right? We don't need to have an extended discussion as to whether the market's fake or not. That's not why we're here. Okay? We're here to listen to what Roger's got to be saying. So let's keep things on point, please.
All right. With that said, wow, getting a lot of emails. With that said, let me just take a look at one more thing real quick. I want to see what sectors are holding up. See, communication, technology, biotech, QQQ, where are chips? Chips were this morning. Chips were here. Look. Right here. And now chips are here. So they were here, now they're up here, and everything, all the speculative stuff is rising. I really like that. I got to be honest with you. I'm really liking what I'm seeing. I'm not saying we're done with this. Nobody knows. This is all based. If our president comes out right now and says we're doing another round of military strikes, probably the market won't hold. But I'm saying, assuming no one says anything, this is looking pretty nice. Okay. And again, let's keep an eye. And I'll be updating you throughout the day. But the biggest thing I'm looking at is this. It's the 20 here. It's this right here. 20-day lows. 562. I want to see this really drop down into the lower number. But I'll take this. This is lower than This is lower than 588, which is where we came in today with. A lot of people thought we were going to be crashing today, and it didn't look like it. Okay. All right. Raleigh, do we have any questions before I move on? I want to talk about the VWAP and anchored VWAP.
No, we're pretty good. Let's keep rolling, brother. Also, do you have any stocks you want to share with us, Roger,
Yeah,
on
yeah,
your
yeah.
watch list?
Let me do that first. Let me do that first. I do. I do. Okay. Let me give you my shorts first. ALAB. That's an A line to the downside, by the way. Gap. Whew. Gap is in the gap. Also, folks, you might, before you ask me, you see my candles are white and yellow. A white candle is a high volume candle that closes up, and a yellow is a high volume candle that closes down. Okay. And I have that on my 5 minute and I have it on the daily. Okay. Just so you know. Not some miracle or some magic formula. It's just high volume candles. Okay. So gap to the downside. We got DHR to the downside. We got A to the downside. Real clean. Nice clean trend. Very nice clean trend there. A. We got BXP. I've been telling you about this stock now for weeks.
Quick question, Roger. The
Yes.
white bars and the yellow bars, are those also available on the Pro Trader dashboard?
I thought we already
Yeah,
have
yeah, they yes.
the white and yeah, they're orange and
They're
here
orange and white
they're
on
orange and white. They're
Thinkorswim.
just different color, but we already have them on the Pro Trader dashboard.
Yeah.
Yeah, we got them on the Pro Trader.
Okay, thank you.
Yeah. They're just different. They're slightly different color. That's all. Next one is Win. Win is coming off. Next one is VNO. VNO's coming off. And BSX. And again, I always confuse BSX with
BXP?
yes, I
Yeah.
can't help myself. I
Easy to
really
do.
cannot help. Don't ask me for on a quiz. I'll get it wrong every time. I'm so bad at that, Raleigh. It's amazing. Now let me give you the longs, okay?
Okay.
SNDX. Very nice move. LYV. Nice high volume candle today. Note of that. FSLY. Now, Matt and I bought this stock. Correct me if I'm wrong. We went long the stock a week ago, didn't we?
Mm-hmm.
And we made money on it, right?
Yep.
Yeah, I'm liking it again. I'm liking it again. And I know if Matt went for it, the options must be pretty liquid. Otherwise, he would tell me no soup. And VRT. That's a nice look. I really like this stock a lot today. That is probably this one and this. Well, actually, to be honest with you, I like all of them, but I like this one in particular because it's making all-time high on high volume, which is really nice. And also, let me just quickly check on my daily scan how strong it is. I always look at. Okay, let's see. Huh. One second, one second. Give me a second. I'm just trying to check something. Ah, 23. Okay. Oh, okay. All right. Very nice look. according to my scanner, let me just tell you what my scanner is telling me right now on a daily basis. I have not screened these, okay? So just FYI. Calv, SanDisk, that's my scanner showing that. Sale, BLSH. Not really in love with any of these. A lot of stocks coming off the bottom. This one looks good. HCA, that one looks good. And no, that's about it. The only thing outside of the stocks that I've shown you that I like, HCA. Add it to my list.
HCA. Okay.
Yeah, HCA looks good. Okay. Um, that is my list for today. Any questions before we move on to the educational section?
Yeah, a quick question from some people.
Yes.
They were wondering, Roger, are these primarily short or long plays, or it depends?
The first list I gave you was my shorts, and then this last, starting with SNDX, everything was long.
Yeah. So would these be day trades or swings or a
No, no,
combination
no,
of
no,
both?
no. I do not look at date. I don't even look most of the time. I don't even look here. I'm only looking at the structure of the stock, which means swing trade.
Okay.
So anytime I give you guys stocks here, they would be swing. So here's the thing. For me to even consider a stock as a day trade, it has to be a good swing trade. So after I consider it a good swing trade, then I would consider it for a day trade. When I am here with you guys, I'm not really considering it for a trade. I'm considering whether it's on my watch list or not. After
Okay.
it's on my watch list, then it can become a swing trade, day trade. But if it's not on my watch list, which means it can't be a swing trade, it can never be a day trade. Does
Hmm.
that make sense? So I'm going
It
to say
sure.
this again. For
Yeah.
so for a stock to become a day trade, it has to be the perfect swing trade. I would never day trade a stock that doesn't have a good swing trade because I have to lean on that stock. I need to have the risk to reward has to line up on that stock. So I will never ever give you a day trade unless I loved that stock for a swing trade first. I don't just pick day trades unless we're talking about the S&P 500 or the small caps. So large
Mhm.
caps, I have to lean on the stock as a swing trade. So my swing trade list forms into a day trading list. My day trading list can never become a swing trading list. Does that make
Good point.
sense?
Sure does. And I think that helps people because
Yeah,
I know that you'll make decisions then, where is it in the range? There are times, Roger, for example, when you really like something, but it's really kind of extended in the range, you might say, this looks like a good day trade.
exactly.
And that's
Exactly.
that's your final analysis on the potential for the trade.
Yeah, and I'm actually looking at this VRT for a possible swing right now because it's making an all-time high in high volume, which is a very strong. That's a very strong sign. So let me just go ahead and tell folks I'm adding it to my watch list in the pit. Now that I've added it, if it pulls back here, I may take it as a day trade. 1 second. I spent a lot of time with people in the pit. Adding VRT to long watch list, looking for pullback, not going to
Yeah.
chase.
So folks that are maybe here or new for the first time or whatnot, this is a live session. And in parallel, Roger and Matt are actually curating and looking at, trades that they're providing, the various services that they have. So from time to time, we need to take a quick little break and manage those trades. That's what's going on.
Exactly. Exactly. Okay. So yeah, sometimes we need to do that. So now let me move on to the next section of this show, and I want to teach you guys something. So I'm going to be teaching you about a tool called the VWAP and the anchored VWAP. Okay. But in order to teach you that tool, I want to use something that will help me illustrate that tool, and that's this volume profile graph. Okay. So let me. Okay. So what the volume profile does is it tells us at what price level the highest level of volume was traded. And in this case, it's over the last 5 days. Okay. So you could see right here is your volume level. We're we're in the toilet right now. We haven't even, this represents 70% of the volume over the last 5 days. Now, the more volume an area has, the more stickiness that area has. The more that's called a liquidity pocket. This is a liquidity pocket because you could see there's a lot of volume here, not a lot of volume here, and then there's more volume here. So if we see price, for example, price is here, and it breaks through this area here, and it breaks through this area, this does not give us a lot of stuff because there's not a lot of volume here. So here you have a huge volume pocket, right? A liquidity pocket. Here you have a really nice liquidity pocket. Here you have a pretty good liquidity pocket. Where we are right now, we're actually getting into a pretty good liquidity pocket. We're going back into the liquidity zone. But here, we don't have a lot of liquidity. So when you're looking at this, the area with the most liquidity is the area where price traded the most in the last 5 days. Now, let me ask you an interesting question, okay? And I want you to think hard along about this, especially if you're new here, okay? And I want you to forget everything you know about the market. I just want you to use common sense. Common sense, because let me tell you what happens. After you learn everything you're ever going to learn about the market, you're ultimately going to forget it, and it's going to only come up in the context of common sense. So might as well start with a little common sense. All right. So I like how volatility is coming down. This is good for the bulls too. Okay. So let's just say, okay, let's just say this is price, right? This is price. And let's say we don't have this here. We don't have this here at all. Would you be able to tell me, and be honest with me, looking at price, would you be able to tell me that the highest level of price hit right here versus right here, for example, without looking at this thing, just by looking at the chart? So let me just open the chat for a quick second. How many of you would be able to tell me that this was the highest level traded over the last 5 days if this thing was not here? You would? You would, Ruthie? Really? Cyrus, you would? Okay, well, I'm glad that some of you could, because I couldn't. I would have absolutely no way of knowing it. Yeah, I would. I've been doing this for 32 years, and if you're telling me you could tell based on this picture where the highest level was versus a medium level by looking at the graph, I'm going to be honest with you. I don't believe you. Okay? I don't believe you. Raleigh, would you be able to?
No.
I don't know how. I don't know how in the world you'd be able to.
Or let's put it this way. If I were able to, it would take so much time and effort, it wouldn't be worth it.
Exactly. Well, yeah, I mean, we all could. I mean, we could just sit there and add up the volume, but I'm talking about, one second. I like the stock, this VRT stock. I may want to go long this. All right. Anyways. So anyway, so so here's what I'm going to tell you. Okay. Here's what I'm going to tell you. I, who've been doing this for over 30 years, and Matt, and I'm going to speak for Matt, would have absolutely no idea that this level was higher than this level without this tool. Matt, would you agree?
I would agree.
Would you agree 100% on that?
Yep.
Okay, I just wanted to make sure. So if you guys are better at it than us, God bless. We would have no way of doing it. That's why they invented this tool. Okay, so we know exactly where it is. So now you're probably thinking, well, Roger, this is pretty important stuff. Like, I'd like to know that most volume went in here at 686 versus 673. That's like pretty important information. And you know what I would say to you? I would say, you're damn straight it's important. It's really important. And then your next question to me should be, well, Roger, how come, I mean, I'm glad you have this on your SPY, but wouldn't we want to have this on every stock we trade? Duh. I mean, if this is so important, don't you think we'd want to know where that level is for the stock? And since we've all figured out that we can't do it with our eyesight, unless we sit there with a calculator for the next 58 hours, do you guys understand why I started with the problem first before explaining anything to you? I wanted you to see what the problem is. So the problem is, how in the world are you, the first thing is, hey, this is really important. I want to know where the price has been traded in the last 5 days on any stock. The most price. Yeah, it would be very important. How come we don't have that number? Where is that number? Why don't you have this for every stock? Like, if I'm trading Nvidia or Tesla, here, I want to know what that number is for every stock I trade, Roger. Like Nvidia, that number is a 182.34 in the last 5 days. And on Tesla, that number is 401.28. Hey, wait a minute. I want to know that number for stocks too. Because Roger, you just convinced me that knowing the highest price, the highest volume that price traded at is absolutely vital. 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 Because ultimately price gravitates to where? To its highest liquidity pocket area, right? Price reverts back to its highest liquidity area. Let's go take this back to the spot. So your next question is, well, Roger, you've proved to me, now I understand why having volume at price is really important. But let's now look at a stock chart. So so let's look at Nvidia for a second, okay? Well, Roger, I don't need that tool. You know why? I have a moving average, and the moving average tells me it averages all the price, right? How many of you think that? How many of you think that? Let's see how many people think that. Right, not volume at the price. Exactly.
Yeah.
Exactly.
People are
So price
starting to
people are
zero
starting.
in on the issue. Yep.
It's funny, Raleigh. When I asked the same question 4 months ago, everybody said, "Yeah, just use a moving average."
Yeah. Tells you what you
Rob,
need.
this is not the place for it, Rob. Not the place for it. If you want to know if Matt is short the spy, check the Telegram channel. So, so now let me go back to this. So, let me show you how a moving average would take this. A moving average would take all of this and would just smush it and average it out. Just average this out. Now, do you think the average of this starts at 662 and it ends at 687? Do you think the average of this is anywhere near the highest traded price? Did you guys know moving averages do not take volume into account? So you have a little bit of a dilemma here. Ken, you can't answer any of these questions. You're a post PhD in MIT. You're not allowed to answer these. You know the answers to these. You know this stuff. So folks, now think about this for a minute. Think about how important it is to know the highest level at which price traded it for every asset you look at. Right? If it wasn't important, do you think I would have a volume profile graph here? No. And then here we are, uh, looking at a stock chart. Now you're gonna tell me that you're gonna be able to look at this chart and you're gonna tell me the highest level Nvidia traded at in the last 5 days? Bullshit. Now let me just show you that level is at right here. That level happens to be 182.35. 182 right here. That level happens to be right around here. Right around here. Without this, you have no way of knowing that. So, and we've established that it's probably really important to know the highest level of price traded at. Because think about this. What if you're just averaging this and 5 shares bought here, right here, when there's no volume, and 1 million shares bought here? Do you think you can average 1 million shares with 5 shares? Do you think that would give you a good moving average of where price traded? No. You see, so far I haven't given you the solution. I've only given you the problem. It's a pretty big problem. So, how do you find out where price is traded on NVIDIA? You used tools called VWAPs, 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 VWAPs. And intraday You use a tool. This is a VWAP right there. The VWAP tells you for any stock at any given time. I just closed my DC 2000 by accident. Okay. Gives you the from the opening, from any opening day, which would be today, it tells you exactly what the opening price from the opening of the day, what the highest traded price is. Right here. How about Tesla? Right here. See this right here? This orange line right here? That's this. Except this is 5 days. This is 2 day. Now, let me ask you a question. Why do you think I have this on my market internals? I only have 6 columns and I have limited space here, but I have a VWAP on every one of my charts because the VWAP represents this, except this is a 5 day and this is today.
Mm-hmm.
Folks, this is the moving average. The moving averages are at 390. The fair value for Tesla is at 386. Do you think there's a difference between 390 and 386? This does not take price volume into account. See these 2 lines? They don't take volume into account. This takes every share that's been traded today into account. So remember how I told you, imagine averaging this. Are you going to get an accurate number? And we all agreed, hell no. But when you look at the highest volume in the last 5 days, you get a really good idea of where things happened. Well, this is the highest level traded. Because you see, we don't know how many shares traded at 392, and we don't know how many shares traded at 380. And a moving average of that would not be pretty. So this is really, really important. I'm not comparing anything, Bill. I'm showing you the VWAP for Tesla and NVIDIA and any other stock I want to. I'm not comparing anything. I'm showing you a moving average gives me a fair value of 389. A VWAP gives me an average of 386. Okay? Now, what about daily? I mean, this is daily. You're talking 5 day. Okay, well, let me show you how I do it on stocks. On stocks, daily levels, we use 3 very important levels. 3 very, very important levels. Those levels are beginning of the year. See these dotted lines? Those are my VWAPs right here, my anchored VWAPs. Now, if you guys want to be nice, anytime you're talking about daily charts, you're going to call it AVAYP right here. AVWAP. Anytime you're talking about intraday charts, you're just going to call it the VWAP. Let me show you. Now, if you say, Roger, what is this VWAP on a daily chart? I'm going to say there's no such thing as a VWAP on a daily chart. There's an anchored VWAP because there's an anchored date. Every daily chart has an anchored date. So you see how right here, say I put the SPY on here, okay? Look at my indicators. See, it has a date, a VWAP with a date. And here's another date. Okay. Where do you set your daily VWAPs, Roger? Beginning of the year, beginning of the quarter. Well, Roger, beginning of the year, beginning of the quarter, beginning of the year is the same date. So obviously your VWAPs here are different. So you're either lying to us or you're confusing us or you're doing both. I'm not doing either. I don't like to use beginning of the quarter. I like to use quad witching dates. Here's your dates for your quarterly VWAP right here. So if you can remember these dates, or if you can't remember these dates, you can probably type in and Google quad witching dates. And these are the dates we change our VWAPs for the quarterly VWAP. And then the daily VWAP, beginning of the year. Does anybody have any questions so far? so far. There is no better way to figure out fair value of something than to look for it on the VWAP. Stacy, I never said anything about quad for intraday. I said VWAP, and it always starts at the beginning of the day, automatically. Automatically, right here. Automatically. Now, remember I told you for daily, there's 3 levels. I only gave you 2. I gave you 2. Well, we're going to have a class in a few minutes, and I'm going to tell you where you stick your 3rd VWAP. Okay? Now, I'm going to summarize everything for you, and I'm going to put a bow tie on it and send you to the class that we're going to have in a minute. But I'm going to put it all together for you, okay? And I'm going to explain why the VWAP became such a popular indicator, okay? Back in the early, I think it was 20, when did we have COVID, Matt?
2020.
Yeah,
2020.
2020 in March.
Right after COVID, the government did not like how retail traders were treated in the market. A lot of people lost money during COVID in the market. The reason that happened was because people were getting laid off. They were desperate. They needed a way to make an income. They had no trading experience. They didn't have Uncle Roger. And they made out like bandits and losing all their money to professional traders like us who were making hand over fist during COVID. Okay. Congress did not like that. They got very, very pissy about it. Okay. And they had hearings. And remember the whole GameStop fiasco? So they were very concerned that markets were now being manipulated by professional traders. And they had hearings. And during these hearings, they brought out the biggest market makers and the biggest retail hedge funds in the world. And they were under testimony, they were under perjury, under oath, so they couldn't lie. And the biggest one, which I'll talk about that in a minute, the biggest one came about, and he says, hey, the Congress started asking him questions. He said, hey, what tools are you guys using to gauge price? And he said under oath and perjury, he said, the VWAP is one of the most useful tools that we use to gauge 1/3 of our orders. Now, I've got news for you. You trade against this market maker. Every 1/3 of out of every 3 trades you do, one of those 3 trades is against this market maker. And this market maker went under oath during Congress. I'm going to give you all that information in a few minutes. And said, hey, we use this tool exclusively to gauge price. This tool was based on this tool right here, volume profile. Because as we know, 1,000 shares bought here and 1,000 shares bought here, and 5 shares bought here are not going to equal the same thing. So a moving average is useless for that. A moving average is great to follow price. A moving average is not something you figure out to see fair value. Congratulations, David. Congratulations. So my point is this tool actually tells you what a fair value of an asset is at a certain level. And when you use it on a daily, as I'm going to show you in a few minutes, it can show you if the buyers or sellers are in control. Okay? So do we have any questions before we move on to the next segment where I'm going to actually show you these details and give you everything in a very, very cohesive way?
No, Roger, you've done a great job, and a lot of people are wondering, so what is that 3rd VWAP? And I know you're going to be covering that in the next section.
That's right.
But once again, folks, for those of you that have been with us for a short period of time, Roger oftentimes refers to this acronym, the VWAP. And Roger,
Yes.
I'm glad that you discussed it and shared with us in detail why it is so important.
Yes, very, very, very important. Very, very important tool. Highly, highly recommend this tool. And truly, truly, and again, folks, a lot of you believe that a moving average. Here, let me summarize for you what I'm trying to say in a really quick way. Imagine this. You want to buy a stock, okay? The stock is going between $20 and $10, okay? It's just fluctuating between $20 and $10, okay? And you're using a moving average. And the moving average tells you fair value is at $15 because it goes between 20 and 10. And 20 to 10, the difference is going to be 15. What the moving average didn't tell you is this. During the period that you're making your decision, 100 million shares traded at $10 and 10 shares traded at $20. So a VWAP would be like at $10.15, right? A moving average will be at $15. Now you're probably saying to yourself, but Roger, how can you weigh 5 shares and 100 million shares with the same? But that's what a moving average does. You know why? Because it only takes price into account. It doesn't take volume into account. Without volume, you've got nothing. The VWAP and the anchored VWAP, the VWAP and the anchored VWAP, anchored meaning daily chart and intraday VWAP, specifically tells you the highest level where volume traded.
Right. And you know, Roger, you have such a focus on wanting to track and see what institutions are doing in real time. I mean, that's a core principle of yours. And then when you find out that the VWAP, is the number one indicator that they use to determine this as hedge funds, big institutions, it closes the loop, in my opinion. Yep.
Yeah. Think about everything I do, high volume bars. What's the point of that? To see what institutions are doing. Relative strength. What's the point of that? To see what institutions are doing. Hackenacci candles. What's the point of that? To get a flow of what institutions are doing. Everything I do has one point in mind: to determine what institutions are doing. If I can't figure out what institutions are doing, I'm not going to be able to follow them. And if I can't follow them, I will not know exactly I'll have no compass. And I always tell you guys, my sole job is to figure out what institutions are doing and to follow them.
Mm-hmm.
Okay. All right, let's begin. I want to give you this class. I think this will be a lot of fun.
Real quickly, Roger, just 1 second here. For those of you that are joining us, have been with us on YouTube, now is the opportunity to jump on to the Zoom room, because the balance of this presentation will be on Zoom, and we will be shutting down the stream to YouTube. YouTube doesn't like it when we do these things.
But with that said, everything we've just discussed up to this point is available on YouTube. And if you want to find it on YouTube, just go to YouTube, type in Roger Scott, and go to the live tab. By the way, I wanted to tell you guys something interesting. Let me just go here. I'll do it right now. I want to show you guys something. So you go to YouTube like this, YouTube. You go to Roger Scott. Okay. Here I am. And you just go to the live tab right here. And you could see this is right now being recorded. This is this morning's. This is Friday's afternoon. And we turn them off after about an hour and 20 minutes. And you could see them all here in order. But what I wanted to tell you was this. We now have almost 28,000 subscribers on our YouTube channel. As of last Friday, we had 22,800. The company told me that they are aggressively putting in premium into my YouTube channel to make it grow. So you guys may be seeing a lot more people on YouTube and in our webinars in the next coming days. If you see somebody you've never seen before, please be friendly and say hello, okay? Yeah. And you could see that there's 99 people watching right now on YouTube. Greetings, everybody on YouTube. Good to see you. Please come in here into the room and to do the second part of this show. So anyway, you just go to the live tab, and I'll give you that link right here. Here, I
put it there. I've posted it, Roger.
Thank you so much. And you guys can find anything we're doing in real time. All right. The only reason we don't put the presentations is because YouTube does not like sales presentations for some reason. I don't even know why, but they don't. Anyways, the program I'm going to share with you, and I'm going to talk a lot more details about this institutional stuff and everything else